Hello, everyone. This is Phil Golfi with the Golfi Team REMAX. Welcome to the Golfi Real Estate Show with Stephanie Vivier.
Well, hello, Phil. It's so great to have you back on the show. How have you been?
I am doing exceptionally well. So excited. This is like the beginning of April is probably one of my favorite times of year. We're like right on the doorstep of like NHL playoffs, which is always amazing. It's the Masters week and the Masters weekend, and I'm a huge golf fan. So that's always fun and amazing. And you know, I spend way too much time following that tournament and watching those storylines. And then it's like, you know, the sprint of real estate, in like that sprint of the spring market, which is awesome. This is probably our busiest time of year. And it's like I said, it's that sprint right before the summer. The weather's getting nicer. You know, the properties are becoming more beautiful. And it's just like everything. There's just so much momentum at the beginning of April, and so yeah, it makes it really fun. And you know, we're looking forward to summer, and we're looking forward to a strong spring market. So that's what I've been doing. It's meeting with a lot of people right now who are planning on listing their home in the spring and getting it ready for sale, and you know, wondering what to do and how to do it, and when's the best time to list, and all those sorts of good questions. You know, I've been answering a lot of them in my life. So things are going well.
All right. Who's your team for the playoffs in the NHL?
Oh, it's got to be the Toronto Maple Leafs. It's
okay.
I follow them a little too closely. It's been a few stressful years, and you know, this year is you know, I think it's gonna line up for the Battle of Ontario for the first round, which is kind of nerve-wracking, but there's at this point there's no one that you can look at and say, hey, this is a good way to, or a good path to take to the Stanley Cup Finals. So but if we got Ottawa in the first round, it would be unbelievable theater. And you know, the first round of playoffs are always the best. It's the highest stakes, and you know, the fastest game on ice. So it's awesome.
Yeah, it's just the question of whether or not they can make it out of the first round.
I know. It's just great. It's awesome. Like, yeah, I always picture myself, right? Like it's like, oh my God, I'm gonna be able to watch NHL playoff hockey outside, and you know, get the outdoor TV going, but it's like we never make it that far to get to that point, and it's so disappointing. But like, you know, our hopes are so high every single year, and I think they're primed, they're ready. You know, they're just playing so good at the right time, and if their goalies can steal a couple games and we get the good goaltending that we need, it's, you know, we can make a run.
Well, you know, I think, Phil, it speaks to your optimism that you are a Leafs fan, that you're a forever optimistic kind of guy.
Yeah, I you know what, and the people that say, you know, if they lose this year, I'm done with them. I'm not watching them anymore. I'm not following. They're lying to you. They're lying to you. I say it every year. You always get that Leafs fan who says they're done with the team. They don't want to hear about them. They don't want to talk about them. They're not going to watch any more games. They're following, you know, just as closely as they always have, and they always will. It's just, you know, it's just like it just captivates you. It grabs you. It just gets every little bit of your attention. It's the Toronto Maple Leafs. I don't understand it. I can't explain it, but I am glued to this playoff run, and I'm excited for it. And I got my Toronto Maple Leafs flag that I put up on my window during playoff time. I'm one of those fans, and I drive around with it, and it's just, I hope it's just going to stay up for a little longer this year.
All right. Well, I'll be sending you some good wishes there, Phil. I am a casual sports fan. I love going to games. I don't pick any teams. I'm really proudly a bandwagon fan, to be honest with you.
Yeah, that's probably the best way to do it. Like for your mental health and stress levels, like to do it that way would be the best way to do it. But unfortunately, I live and die with the Toronto Maple Leafs, and it's not good.
Well, some people are just really born with it. So I'm glad you share it and you love it and you're optimistic about it. And you mentioned you're getting a lot of calls about like when to put the house on the market, all of those kinds of things. Is it now? Is it April? Should we do it now?
Yeah, like I always say we're in this little 4 to 6 week hotbed right now where it things are starting to move, things are starting to chug along. There's not a lot of inventory right now. So there are great selling opportunities right now if you're considering moving. But the problem is you have to go find somewhere else to go, right? So a lot of people are dealing with that kind of Jekyll and Hyde. It's, if I put my house up for sale and I sell, what are the inventory levels? Am I going to find something that I'm going to like? So that's always difficult. Everyone's situation is so different. But like traditionally, if I was a seller and I've been a seller before, I want to be on the market when no one else is on the market. So if you're the only house in the neighborhood that's has a for sale sign in your front lawn or you're the only one for sale, that's your best opportunity to get the most amount of money for your home, because that's the only one that people are looking at. So, traditionally the inventory starts to climb. It's going to start to climb here in the next couple of weeks. There's going to be more sellers that are going to be coming to the market with new listings that are thinking of selling. I always advise people, I go, you don't want to be competing against the most desperate seller in your neighborhood. For whatever reason, you will not, you can't compete against them because they're the ones who are willing to drop their price to a certain amount to get their home sold because they're the most desperate. So if you're competing against those people, they're going to win every single time because they're just willing to take a lower offer or list for a lower price. But when you're on the market, you're the only person on the market, you're going to get those viewings. You're going to get, 2 to 3 to 4 viewings a week, which is amazing. So, traditionally right now is a really, really good time. There's a lot of active buyers out there that are looking. But buyers, when it comes to buyers, they're being very picky right now. In terms of, what they want, what they're looking for, and just in terms of price competitiveness. So, in the super strong markets, the buyer, a traditional buyer would be almost afraid to lose something. It's like, we need to go now. We got to get this house. We're going to be in competition. This is how we got to proceed. And in this market, it's like, you know what? I really like this house, but I don't love it. And if it was, I'm willing to wait for another similar style property to come up or a better price property to come up. So there's a lot more buyers out there that are looking, but there's more, they're taking their time, being a little bit more analytical, being a little bit more picky. And so there's this constantly jockeying for position in the market. And so it's very balanced, but like I said, if you're a seller and maybe you tried to sell last year or the year before that and you want a certain number and you didn't get that number, this is the time to come back up on the market and see if you can get it, because there's from my experience, there's a lot more buyers out there now in comparison to the last 2 years. So we had this amazing stat, and we track every single appointment from our appointment center. So this is all of REMAX Escarpment, all of REMAX Niagara. In March 2021, the second Friday, there were 600 appointments booked on that Friday. So the second Friday in March. This past Friday, so last week, the first Friday in April, we had 600 appointments, over 600 appointments booked on that Friday. So right now, we're seeing levels of 2021 appointments booked, meaning showings, meaning buyers going out to see showings. So we're seeing those levels of appointments that are being booked right now. If that's any indicator of what's going to come in the next weeks, the weeks to come, the next 2 to 3 weeks of how our market's going to perform, that is a crazy indicator of buyers that are out there looking right now and looking at properties to buy, and what's going to come in the next few weeks for our market.
Well, that's some great news. I like that good news. There's a lot of bad news in the headlines right now. So one of the things, Phil, that people will look for, often people start that home search even before they talk to a realtor, is the square footage of a house. And there's a lot of confusion about this. I don't even know if people understand how square footage is calculated or what is all included. So can you break down, like when I see, it's a 2,500 square foot house, what does that mean?
Yeah. So for every house that's listed, we provide an MLS data sheet, meaning it has every little indicator on the listing for prospective buyers, agents to share with their prospective buyers about the house. And it's almost, it's like a Scantron sheet that we fill out for every single listing. On this sheet, it talks about, the age of the shingles, when the house was built, the square footage, what the property taxes are, all the room sizes, if the house is on gas or propane, or if it has a septic or a cistern, or if it's attached to municipal water. So on this sheet, it has all the information that you need that basically describes the house through a set of data terms. Okay. Now, square footage is, one of the most important things when it comes to information about a property. How big is it? How much square footage is it? Because that is directly correlated to price, right? Like everyone always talks about, what's the price per square foot? Well, if that square footage is wrong and it's inaccurate, well, that is going to reflect, the value and the price of the home that a prospective buyer might be willing to pay or is willing to pay. Now, when we pull the square footage, right, there's a few sources that we have. So we have access to MPAC. And MPAC has a square footage because that's usually based on what your taxes are on. Okay, so we can pull the MPAC sheet and see what MPAC has as the official square footage of the property. Now, sometimes that's inaccurate, right? Sometimes people might put on an addition without a permit, and therefore that does not get reflected on the MPAC forms. Other times, MPAC might receive the wrong plans or the wrong information from the builder when the property was built, and so that's inaccurate. So there's been times where if we're going on based off that information and not measuring it ourselves, well, we are now providing inaccurate information. And when I say we, I mean the entire real estate body, or realtors in general, are providing inaccurate information to prospective buyers who are using this information to make an educated decision on purchasing a home. So it's so important to get the listing details correct and right when it comes to marketing a home, presenting a home for sale, and then selling it. And square footage, when it comes down to it, is, like I said, one of the most important things. So today, there's a few things, and everyone does it differently, but we have laser measurers, which is basically a 3D tour of the entire home that will produce a floor plan and produce a square footage number, like a digital laser measuring company will come in and do that. On top of that, you can also measure the exterior of the home, and then subtract if there's a garage attached to it, you subtract the garage, and you can get your square footage that way. But there's been, significant lawsuits of people that have bought homes that were provided inaccurate square footage, to later find out that, hey, this house is, 400 or 500 feet smaller than what was listed online, and it's resulted in big time lawsuits. So it's a couple things. Professionals, the real estate professionals, need to provide more accurate measurements, right? That's on us as professionals, whether it's measuring the exterior of the home, or getting a digital laser measure and just double verifying the data that's on, that might be with MPAC. And then combined with that, it's double verifying that information and making sure that the source of the square footage that was provided is accurate and correct. So it's a thing in our industry that you got to pay close attention to. Now, for me, I've walked through thousands of homes. You can almost you can almost feel an eyeball of square footage to the 50th square foot. Like if I walk into a 2,400 square foot house, I would be able to tell it's a 2,400 square foot house, right? Like you can tell. So if there's an inaccuracy in square footage and maybe the house was saying it was 3,000, if with that experience and walking through a number of homes, you can kind of feel it and tell, and your spidey senses will go off and say, hey, where's your square footage? How'd you get this? And what did you do to get it? So, but there's been unscrupulous agents out there who have on purpose listed the wrong square footage to make their listing more attractive. But this is, it's just almost a red flag in our industry, but it's making sure that if you're working with an agent today, or if an agent's selling your house, it's making sure that you have the accurate square footage that's provided to accurately list your home for sale and market it for sale. And because if you don't, there could be repercussions with listing it with an inaccurate square footage.
Great information as always with Phil Golfi here on the Golfi Real Estate Show. We'll take a quick break and be back with Phil after this here on News Talk 610 CKTB.
Are you worried about selling your home on time and for the most money? Hi, I'm Rob Golfi. Every year we invest millions of dollars in our advanced marketing system, ensuring your home is seen by tens of thousands of potential buyers. We don't just hope it sells, we make it sell.
And welcome back to the Golfi Real Estate Show. I am your host, Steph Vivier, and our guest today is Phil Golfi, getting into some great conversation and great advice if you are out in the world of real estate or hope to be soon. We've been focusing a lot on the financial markets on our show this week. Trade and tariffs have caused the markets to go up and down more than a roller coaster at Canada's Wonderland. But Phil, some economists are looking toward the housing market and warning that we could be seeing some similar turbulence there.
Yeah. So, everyone's asking, how are tariffs going to impact you? What's happening in your real estate market? What's going on? And it's so funny because I always say, we have an entire population of people that just do not pay attention to what's going on in the exterior factors in the markets, right? They just, whether they have their stocks or their wealth, and they look at it once or twice a year, and they're just those traditional investors. So I always say, if you have 2 kids right now and you're going to have a third, and you're living in a 2-bedroom townhouse or a condo, or, you're going to need a bigger house. So is this person going to wait and, wait for these tariffs to settle, or are they just going to make their move because they need a house and that's what's best for their family, right? And if you're an older person and you're living in a 2-story home and you'd prefer a bungalow, right? So you're still going to sell and want that bungalow because that's what's right for you and that's what's best for you in your life at this particular time. So I always say to us in terms of how I answer this question, it's like, we're problem solvers, right? We help people make the best and most informed decisions when it comes to their real estate needs. But it's we don't know. We can't predict of what's going to happen. So are you going to put your life on hold for 5 years and wait for this market to or whatever, right? And the answer usually is no. Like I want to move right now. I need a bigger house for my kids. I want to be closer to the school, or I'm an empty nester, or I'm a widow and I need a smaller house. It's too much to maintain. So it's like, okay, let's make this work. And how are we going to do it? But what in tariffs in terms of how they impact the housing market is mostly the new construction, and the condo developers and the builders that are working through this right now. And the cost it's just so crazy because it's, we go through this whole COVID market and COVID crisis, and then we finally get out of it, and that's amazing, and we're looking forward. And then all of a sudden our interest rates jump to astronomical highs, and, the mortgage crisis and people's payments are jumping and interest rates are through the roof. And then it felt like we're just kind of like, okay, interest rates come down, the market's starting to chug along. Here we go. It's almost like back to this normal reality of what a real estate market should be. And then boom, it's like we get into this trade war, this hammer comes down of uncertainty of what's going to happen in our financial markets, what's going to happen with jobs, what's going to happen just all around Canada. And it's like, put on your seatbelt because we're here and we're back for another ride. Like the last 5 years have just been incredible for us. So, but when it comes down to, the tariffs and the trade war and how it affects us, it's the new construction and the cost of the building materials that are going to be used for those new construction. It's just going to be passed to the consumer. So you have a builder or developer that's sitting there looking at this and saying, well, if I were to build this house or build this apartment building or build, whatever, the end cost for me to sell it and actually make a profit is so astronomical that I would price myself out of the market for a prospective buyer. And so now that prospective buyer is looking, okay, I can go buy a new construction house for, whether it's a townhouse for $800,000 or I can go buy a resale townhouse for $600,000. Well, what am I going to do? Well, they're going to go pick the resale townhouse for $600,000 every single time over the new construction for $800,000. Just because of that, the amount of costs that builder or developer had to incur is now being passed down to the consumer. So what's happened now is we're in the middle of a housing crisis. We want to build more homes. We talk about the importance of building more homes with the growing population and so on. But the amount of costs that are incurred by the builders and developers are now being passed to the consumer. The prices are going through the roof. So now they're sitting back and they're sitting on their hands saying, I can't start this project because I don't have the commitment and the faith that I'm going to be able to sell it. And for them, it's going to end up costing them way more in the long run in terms of costs and overhead and financing and interest payments, that there's just not that confidence right now from the building and development community to build more homes. And then that gets back to our inventory question. So like we're between this rock and a hard place of we want more development, we need more houses, this is what we want, but there's this constant, what are we going to do? Like I don't want to take on the extra cost, but I want to build them. So there's just a lot of people that are sitting on development projects and land right now, combined with builders that are already sitting on inventory that they have not sold off but have built. So it's the new construction is definitely difficult, and things are hard right now for those builders and developers.
Well, they are. I think it's a great point that you make, though, Phil. I mean, we can kind of get wrapped up in the headlines, and for the most part, a lot of the markets and the real estate market will get wrapped up in what's going on in the day-to-day. But in the long term, we all need to live somewhere.
Yeah.
And this time will pass, right? So for those who aren't, at the end of their career, who are looking at retiring and maybe changing up their house and things like that, for the most of us, we're in the middle part of the life where, in 4 years, it'll be somebody else down south and then things will be different. So who knows what will be happening then. So I think it's like a little bit of a con that you're bringing to us where people get really wrapped up in this stuff.
Yeah, I mean, it happens with real estate all the time. Like if you read the headlines, there's a lot of fear out there in regard to our markets. Prices have not moved all that much, right? Like we've seen sales decline in terms of like unit sales decline in like upwards of 35%, 40% in some areas, which is an astronomical number. But that just means that there's less people moving. And it's obvious why less people are moving, because the cost of moving is so high from, if you're jumping around and so on. And what we'll see, traditionally, when we saw that 2016 market pop and then we saw that 2021 market pop, is if you've created, a great amount of equity and your home has appreciated to, a level that you're happy with, well, then, yeah, it's easier to make that move up and so on. And, you don't mind paying the land transfer tax and the other fees that are associated with moving. But anybody who's bought a house in the last 4 to 5 years, we've been in a flat market. So like, we saw that huge pop in 2021 and 2022. But after that, if somebody bought a house in, late 2022, 23, or even last year, we haven't seen that huge market appreciation yet. And so there's more people that are just kind of sitting on their hands waiting for that next, is our market going to jump significantly? And if it does, well, then, I'm happy to make my move then. So, yeah, so that's what's going on. I mean, when you look at the amount of land transfer tax that's being missed out on by the government, with the lack of moving is significant. And when people move, it's so good for our economy. Like the ripple effect of just one single person moving. If you look at the amount of people that they talk to, the amount of the amount of money that's generated through a single move is so significant for the economy. And when you cut that in, year after year, you're down 30% and 40%. It's just it has a hit on the economy.
All right. Well, let's go, Phil, to the scenario where, some people are going to be buying houses, want to be buying houses, and there is a mortgage stress test. So now the question is out there. There have been some changes made to it. So is that going to make things easier or harder for people? What are the changes, Phil?
Yeah, so they've altered the stress test to a point where when the mortgages jumped so fast, so quickly, you always had to be qualified at a rate that was 2% higher than basically your interest rate. So when the rates jump to, a high 5 or a high 6%, say if a mortgage was 6.25%, well, now you're being approved at 8.25%. Well, that made it, completely unattainable for especially like first-time home buyers to be able to try and qualify for a mortgage at, almost 8.5% was so hard. So as the rates increased, they changed the stress test limits and in terms of what approval rates they were at. Now, one of the big ones about the stress test and how they changed it, and I can attest to this because I went through this. I bought a house, and I was planning on selling a condo to buy this house. Unfortunately, I didn't put a sale of property clause in the house that I bought, and my condo did not end up selling. And so I went to go get approved for a mortgage. And due to, me owning these two properties, the bank said, hey, listen, we can approve you, but it's not going to be on an A lending mortgage. So I ended up having to undertake a B level mortgage, it's just a little bit higher of an interest rate. So on the house that I bought, I got a B level mortgage. Now, what happened in late 2024, I think it was November 2024, I would have been approved on an A level mortgage if it wasn't for the stress test. And so I had to incur this higher interest rate and pay this B-level mortgage, which I was completely frustrated about, for about a year. But in November of 2024, they changed the rule where if you're going to renew your mortgage or you're going to transfer it to a bank, you do not have to be qualified at a stress. The stress test doesn't apply for you. So I was in this mortgage for less than a year. As soon as they had this rule drop, I went and reapplied for my A-level mortgage, the one that I wanted in the first place. And I was approved immediately. So I was directly affected by how this stress test changed. And now I got my mortgage rate is almost half of what I was paying on the B-level mortgage, which is a significant dollar value on a monthly basis in terms of what I was paying before. So when it comes to the stress test, they're trying to make it easier for to get more approvals for first-time home buyers, and one of those changes was the one, if, like I said, if you're transferring or renewing your mortgage and you're changing banks, you do not need to be qualified at that stress test level. So that's my success story with the stress test. Like I said, I'm sure there are other people in my position as well where you try to go get approved. The banks aren't approving you, but there's an alternative lending solution, which is obviously a little bit more difficult, a little bit higher interest rate, but it ended up working out. So if there's anybody who's on a higher rate or on that B mortgage, go talk to somebody and say, hey, listen, I know there's, I might be able to get qualified on a lower level mortgage at an A lending solution, meaning like one of the big banks, and you might be able to cut your interest levels in half, and talk about stress. That was the stress test for me.
Yeah, that higher payment for sure. Usually with those, if someone does have to go the B-level mortgage route, Phil, would you advise doing, that year sort of thing, like try to get the shorter term and see what things look like in a year or so? Yeah,
100%. And that was my whole thing. It was like, okay, well, I'll take on this interest rate for a year, see what I can do. And my entire goal was to get back to an A-level mortgage. And so you start to structure and you set up your life, and there's things that you can do to get back there. Now, my condo ended up selling, which was like, well, obviously one of the biggest factors as to why I also got approved to an A-level mortgage. But if I didn't sell my condo, I still would have got approved. But it was due to the stress test that I wasn't able to get onto that A-level mortgage in the first place.
All right. Some great advice, as always, here on the Golfi Real Estate Show. Our guest today is Phil Golfi, and Phil's going to stick around, and we'll talk about some home builders, and they're looking towards costs being higher. We'll find out more about that. You're listening to the Golfi Real Estate Show here on News Talk 610 CKTV.
I know the importance of hiring the best agents.
I'll take a photo of your house and post it on the World Wide Web.
Next,
Our multi-million-dollar marketing system reaches tens of thousands of potential home buyers every day.
go to robgolfi.com and put the best team to work for you.
Welcome back to the Golfi Real Estate Show. I'm your host, Steph Vivier, and Phil Golfi is with us today, having great conversations, some great advice for those who are looking to get into the market, who are in the market already, and just interesting chats as always. All right, so let's talk a little bit about home builders. And Phil, you talked earlier about how home builders have been in a really difficult situation over the last few years. You know, we had some higher interest rates. Interest rates have been coming down. We had supply issues when it comes to COVID and different things that happened maybe 2-3 years ago. And now we've got the tariff thing going on. So what are home builders saying about their future?
Yeah, lucky us, eh? So I had a meeting with this. He's a big window manufacturer in the area, and they get all their windows from the States. Every single window that they produce, they're massive window. And so I said, well, you know, how, you know, and I asked him the same thing. I go, are you, you know, how are tariffs affecting you guys, and what can you expect? And he's like, yeah, like it has a dramatic and immediate impact on our business in terms of where our costs are going to go and the levels of windows that we can import. So, you know, us Canadians, we're so amazing at adapting and overcoming. And that's what we do. That's what we've always do. And that's what we're going to do. And so we had this conversation, and I said, well, I go, there's going to be a lot, you know, there's going to be a lot more good, maybe not a lot more good, but there's going to be good that comes out of these tariffs. And here's my reasoning is, you know, he talked about this relationship that he had with a manufacturer in the US. This relationship, it's been amazing forever, but they haven't looked for any other manufacturer in decades, right? This was a relationship. It was great. Everything was going. So right now they're in the process of looking into Switzerland, looking into Italy. They're going all across the world to see if there's a better opportunity or a better way to import these windows. And I said, well, I go, how do you know there's not a better option out there? And he looked at me, he goes, you know what? He goes, we haven't really looked for one. And he goes, there might be something that is amazing that comes out of this, where we meet a new partner and develop a new relationship of somebody that we didn't know about or never looked for before. So there's going to be a lot of movement, a lot of adjusting, but you know, there's a lot of great business owners, a lot of amazing people who are paid a lot of money to go figure out the best way for their company to adapt and overcome this. And that's what's going to happen in some cases. And in other cases, it's just the price is going to go up, unfortunately. So, you know, we hope that we can limit the costs, obviously being passed to the consumer and having a direct impact on, you know, home building and limiting the houses that we need to build and we want to build for the young home buyers today. So it's just, you know, if you look at demographically in terms of how this is going to change, well, you know, more people might start to look at, okay, well, instead of building new or going to buy a new house, maybe we just add an addition, or, you know, the cost of, you know, buying an older house and renovating is going to be a lot different in comparison to moving up into, you know, a newer home or a newer model. So we're going to see, you know, shifts and changes like that happen in our market. As the longer this trade war goes. just due to the new building costs of materials that will have tariffs on them and the amount it costs to build a new home today. So it's, right now we're kind of shuffling deck chairs around, but if a builder does not want to take on a new property or a new project and they want to wait this out until costs come down, or until suppliers figure out a way to be able to manufacture, materials and at a cheaper level, the value of the resale home will continue to stay strong and rise, because there's not going to be a ton of new inventory of new homes onto the market.
Yeah, right. And as you point out, though, if you do sell your home, you've got to go somewhere. So
yeah, and that's the shuffling the deck chairs, right?
Yeah, exactly. You really speak to, I guess, a complacency, right? Where businesses have done they have these relationships, they continue the relationships, they don't change them because they work for everybody. But this is a bit of a wake up call, right? And I agree with you that I think some real good can come out of all of this. At the same time, I hope we continue those relationships. There's let's remember, it's administration that's doing this and not our actual American friends and neighbors. We're so close here in the Niagara region, and I'm willing to bet the Golfi teams worked with Americans that have come here and even purchased properties and things like that.
Yeah, I mean, especially with the dollar and where our dollar is. If our dollar, continues to not do well, and we've seen a ton of Americans come up here and look at purchasing properties. So yeah, you're right. It's important to keep those relationships strong. And almost try to look past the political implications, as they're not reflective of Americans themselves, but more reflective of the man in office. But yeah, it's, we've seen a lot of, we've talked about the snowbirds from, in Florida and wanting to sell their places and coming back home and investing that money into other places and other parts of real estate, whether it's, upgrading their home or buying investment properties or things of that nature. So, we'll continue to see this constant shuffle of what's gonna happen in, our markets. And like I said, demographics are so important when you look at people's habits and what they want to do and how they're doing it. And I always look back to my story and my home ownership story. It was, more of a traditional one, whereas I was a single guy. I went and bought a condo. I got into the market. It was amazing. I loved my condo. It was perfect for me at that time. I moved out with my girlfriend. We moved up to a townhouse. Amazing. Sold my condo, moved up to a townhouse, lived there for a couple years. And then we moved up and bought a detached home. And that's, like I said, that's the traditional home ownership story of what home buyers go through, right? Like that's kind of what it is. But if you don't get that appreciation value on your first purchase, it's so much harder to make that jump to that next level, right? So from my condo to the townhouse, it was almost like I was moving up, but the amount of money that I made on my condo made it so much easier. We have an entire, almost generation of first-time home buyers who bought condos, whether they're pre-construction or so on, who are living in them right now, that are wanting to move up to that townhouse or detached house, that are afraid to, or just, it's harder to because of they haven't made any money on their condo. It's at the same levels that they bought it at, or if not less in some situations. So we're not seeing this, like I said, or I'll call it, the traditional homeownership ladder or timeline. We're just not seeing that happen as fast and as quickly as we did before. But I think that'll change. We've gone through generations and decades of like constant appreciation and fast appreciation of home prices. And we had this massive bubble and this massive jump happen in 2021, what was so uncharacteristic for a traditional real estate market, just to the external factors of COVID and interest rates that were next to nothing, that people were buying at these inflated prices because it became cheap and affordable. The money became cheap and everyone was getting approved and so on. And then, comes the stress test and all these little mortgage implications. It makes it a little bit harder. But like I said, that ladder will eventually come back. It's just not there right now for the traditional, first-time home buyer.
Yeah, I think, whenever I bought my house, it didn't appreciate like that, right? That 2016 jump and that, 2021 jump are so out of the ordinary for people who've been in the market for a little bit longer. So I think for the younger people, you're right. It doesn't look the same as it did 5-10 years ago, but it's not completely abnormal. Like, we just kind of have to get back to more of a normalcy, and it's going to take a little bit of time to catch up. And then of course you have the external factors that we've been talking about, of whatever is going to be happening coming from the south. So I think it's it'll all come around. So yeah, interesting there. But you never want to see home builders not want to build, right?
Yeah. My advice, and it's so funny because, I've been doing a lot of open houses lately, and oftentimes you get people that will pop in and say hello and just ask like a real estate question, right? Where they're not even interested in the house that you're having an open house at, but they'll pop in and say, hey, I got a question. Here's my situation. What do you think? And a lot of the time is everyone thinks that they're in their position alone, right? They think that they're the only one who's lost or who bought a house for a really high price, and they might not be able to get what they wanted for it, or they might not be able to sell what they paid for it. And so oftentimes it's like, hey, I bought this condo or I bought this townhouse. It's worth a lot less than what I paid, but like, we want to move out of it. So like, what do we do? And obviously nobody wants to sell less than what they bought it for. It's just not a good feeling psychologically. And also in when you look at your bank account, it's not a good feeling either. But it's like, okay, so that house that you're going to be moving up to had also come down in value, right? Like you're trading in the same market as those other houses that you're buying. And so I had this really good conversation with this guy who lived in a condo in Burlington. And he said, well, we go, the condo was great. We're expecting our first child. We need to move out of it. We can't, we don't want to live here with the child. But we overpaid for it. And what do? Do we hold on to it and rent it out? Or do we just sell it and take a hit? And I said, well, yeah, psychologically you're taking a hit. But I said, my message is, if you're going to compare it to the other house that you're moving up to, that house has also come down in value. And so as much as you're looking at your own financial situation, if you're going to wait for your house to get back up to par of what you paid for it, well, the one that you're looking at to buy is also going to appreciate, similar values to what yours is. So there's always that constant struggle of especially in this market of like, what do I do? If I'm thinking of selling. So I always say, if you need advice, call a real estate agent. They'll set you up and they'll give you a strategy of based on your specific situation. Because when we get on the radio, we start talking, it's very broad, right? And people have such, specific situations that they need help with. And I always say, get in touch with the realtor and they'll be able to help you the best they can.
Yeah, and you can do that. You can call the Golfi team at 905-641-0308 or online at robgolfi.com. You can also send questions for the show here. And I know Rob has done this in the past. Some listeners send in questions directly, and I'm sure you'd be open to that, Phil. I love to hear, though, that you're kind of open to people coming into the open houses who aren't interested in the show or interested in the house. That's great, because I always see those open house signs and it's like, oh, you want to go in,
Yeah, and it's so funny. Like, every time somebody walks in, they think it's Rob going to be standing there, and it's usually not. It's like, we have a big team, so it's oftentimes one of our team members, and they'll walk in and they'll be like, well, you're not Rob. Like, I don't want to talk to you. Where's Rob? Like, I want Rob's opinion. But then, oftentimes it's, I go, okay, well, what are you working on? Where do you live? How long have you been there? And you get talking, right? And everyone loves their home. Everyone loves talking about their house, just like me. And, I love where I live, and, there's things that people want and see themselves in their home. And, I always like, life is short, right? Like I always say, especially people with kids, what house do you want your kids to grow up in and remember? And, I always say, like, you know, you're in this position. Your kids are only going to live. They're only young once. You want to provide for them. You want to give them an amazing childhood. It's like, okay, well, if you want that backyard with the play set or the pool, or like, go do it, right? Like your kids are only young once. Instead of, you know, you're in this position where you're like, oh, you know, I'm hoping my house appreciates or increases, and like it's this constant struggle, right? And like I said before, everyone's situation is different. But like, just talking it over with someone is gonna benefit you so much and make you feel so much better, and almost clear your mind in a way that will help, especially in these changing markets, right? Like, it's just so unpredictable and almost unbelievable what's going on and what's happening.
A great conversation as always, Phil. Thank you so much for joining us today.
Yeah, awesome. Happy to be here. Thank you so much.
That's Phil Golfi, and this is the Golfi Real Estate Show. If you'd like to get a hold of Rob or Phil or any of their team, give them a call at 905-641-0308 and check them out online, robgolfi.com. You're listening to News Talk 610 CKTV.